Traders, welcome to another edition of Institutional Sundays. Amazing, right? Something completely different. You're actually getting to see my setup. Thought I'd try something different. I've got a brand new mic. Let me know in the comment section, does it sound better? I've got this Rode mic now. I took heed of the comments last week. So let me know in the comment section if it sounds better. Amazing Institutional Sunday for you this week. You're not going to find anything like this on the internet. I know it for a fact. It's rarer than the most, just trying to think, exotic bird in the world. Being able to see that, that's the equivalent of what I'm going to show you. Okay, this is based on years working on a trading floor with some of the biggest investors in the world. That's how I've learned to interpret this data. So we're going to talk about what happened last week. Next week, so last week was obviously the jobs report. We're going to break that down. And then going forward next week, very light data calendar. So seasonality is going to be very important. Now, before I start, you can see things I've just talked about there. You're not going to hear that anywhere else. So if that's what you want to actually learn how to trade rather than being fed some pipe dreams, right? If you actually want to know how to trade and how you could potentially turn this into a career, then like and subscribe, okay? I don't know if I'll be able to put that here somewhere. But yeah, like and subscribe, like the video, subscribe to the channel, and obviously you'll be getting a lot more content like this. So just to quickly summarize before we get onto the charts, which we're going to do in a second. So yeah, this week we're going to be talking about seasonality, okay? Really important because it's a light data calendar. The market's going to be focusing on different factors, okay? There's not going to be much coming out in terms of statistics. We are going to have a look at last week's job report. I'm going to break that down into detail for you. Like I said, you're not going to see this stuff anywhere. I'm going to say it once and then another million times on future videos. If you're interested in Lamborghinis, forget trading, okay? That's not how this works. Go to the Lamborghini showroom if you're interested in Lamborghinis. Don't watch trading videos, okay? That's not going to get you a Lamborghini. If you're lucky enough to do well in this business, then obviously that can happen for you, but that shouldn't be your goal, okay? Your goal should be to work hard, and you're going to see the amount of effort I put into actually my trading week, even to do this video and actually to set up my week, okay? Pages, okay? Many hours of research has gone into the stuff I'm going to talk about today, and there's a lesson there, okay? So the lesson is that I kind of understand why people on channels like YouTube show really ridiculous trading videos. I've seen it, even with hundreds of thousands of subscribers. It's really a sad state of affairs where they're just showing some squiggly lines and making people think that that's what makes the market move. It isn't, okay? I'm going to show you today why the market moves. We're going to get into that in literally 30 seconds. But it is important that I say this prerequisite, especially for people who are watching institutional trading for the first time, okay? We will go into my account, so don't worry, I'm not just giving you lip service. You'll see, I traded the jobs, not necessarily the report, but positioned for it, okay? And did about 8,000 this week, so I'll show you my live account. No one's going to show you that. I'm going to show you that because I do like to back up what I say. So that will be part of today's video as well. But mainly, just to recap, we're going to be talking about the jobs report, kind of why the S&P, or just markets in general. Obviously, we're very bullish last week. And then we're going to go into the future. We're going to see how can you trade the next week, the next month, August, September. What should you be thinking about? Seasonality, as I already hinted at. Going to be a big thing, okay? So don't forget to like and subscribe if you want to see more videos like this, and let's get on to the PowerPoint and then onto the charts right towards the end. All right, see you on the other side. Okay, traders, here we are. No need for a intro. We've already done that now. You can see, got an action-packed, in fact, unbelievable Institutional Sunday today. Like I said, week in review. Let me just quickly show you so you can kind of see what to expect in this action-packed Institutional Sunday. We're going to be talking a little bit about COVID very briefly because it had an impact on the start of the week, supposedly. ISM manufacturing. What else are we talking about? The calendar last week. We're going to be talking about that. S&P 500. We're going to be breaking down the unemployment number very briefly, seeing kind of what it means, the outlook on that, seasonality, consumer, just kind of state of the consumer, and then the calendar for the next 12 months, and then finally just look at some performance from last month. So just over 7,000, just under 8,000 for the month, which we'll obviously have a look at. So you can see lots to get through. So I'm going to go quickly because I'm going to be honest with you. It's about 1 a.m. I'm absolutely knackered, and I've got a lot of hoovering. I've got to do a vacuuming in the morning, and I'm not even joking. So I'm going to get to bed early. So in all seriousness, and I'm not joking, I do have to do vacuuming, but in all seriousness, we've also got a lot to kind of prepare ourselves for this week. So let's do that. But to do that, it's important to just catch up with what happened last week, because the markets are a story. It's a continuation, okay? Don't make the mistake of thinking, oh, it's last week, it's old news. It's not, okay? When manufacturing data, when services data, when jobs report numbers come out again, right, in a few weeks' time, and obviously things like claims are every week, unemployment claims, you need to know what was the last number. So it's good to have a recap, have a think about kind of what does it mean, how does it fit into the whole story. So that's what we're going to very quickly do, is just have a review of the week. So what happened last week? Well, last week we were up 1%, and this might be the S&P, but I've said it many times before, okay? It's reflective of the global markets, okay? Many markets did well last week. Even crypto did well last week, okay? It was influenced by what is going on in the biggest market in the world, basically, the S&P 500, all right? So in terms of speculative risk taking. So the week in review, okay, manufacturing was on Monday. In fact, let's remind ourselves of the week, just generally what happened. Monday we went down, Tuesday we recovered, kind of like previous week. Do you remember we had that sell-off and the V-shaped recovery? Wednesday flat, okay, Thursday slight rally, and then the jobs report on Friday, okay? Most important thing to realize is, yeah, we might have had some trade data, but it was a very low impact event, and there was nothing new in the trade report. No one was really focusing on that. A lot of this rally was because of positioning ahead of what was expected, a very strong jobs report, and the labour market delivered, right? We added, I can't remember the exact number, it was about 900,000 jobs on the payroll. We're going to have a look at that. Obviously, the unemployment rate ticked down heavily, more than forecast. So very, very strong number. Market was expecting it, and obviously the number was delivered. So ahead of that, there was a lot of positioning last week, if you remember, and that helped us end up very solid week. 6 months now, the S&P has been rising. Thing is about 19% this year, okay? If you don't know this stuff, you need to know it, okay? And I'm sorry to say this, but if you don't know this stuff, you're not going to make it in this business, all right? That's why people try and make you, give you all this silly stuff to follow, because it doesn't. It makes it seem easy. It's not. You've got to know this stuff, just basic stuff. Have a feel for your market. If you don't follow this market, it doesn't matter, but you've got to know it to the level of detail I'm showing you here. It's really important. So anyway, that was kind of the broad picture, right? Let's actually think about what actually happened last week, day by day. What were the drivers? Well, manufacturing number, if I remember correctly, came in below forecast, just below forecast. So I'm going to do back and forward, go to the calendar, come back. I believe it was under 60. First time in 6 months. So there you go, 59.5, less than forecast. First time, I believe, from what I was reading over the weekend, that we've been under 60 in this year, essentially, but still in expansionary territory. Oh, by the way, I forgot to say in the comments, let me know if this microphone, I said it at the start, but I've got this new microphone because a lot of people saying, hey, invest some of your profits into a microphone. So I've done it. So let me know if this microphone is better. Anyway, back to the point, 59.5. People just don't understand this stuff. They look at this and say, oh, it was under forecast and that's why we sold off. Complete load of rubbish, okay? This was an incredibly strong number. Okay, the manufacturing sector right now is very, very strong. Not only the ISM, but all the reports that show manufacturing sort of health have been very, very strong. And 59.5 means expansion. Above 50 is expansionary. Okay, so yes, it was the first time we've been dipped below 60 in the whole year, but we've been above 50 for like 18 months now. So here's some perspective on it. That's what I wanted to show. Okay, so there you go, above 54, 18 months, I believe it is, a year and a half, we've been in expansion territory. Okay, anything above 50 is positive. Okay, it means the manufacturing sector is expanding, manufacturers are positive. Okay, prices are a little bit high, but we know that. Input prices for manufacturers, we know that, because obviously logistical issues due to COVID, and obviously a lot more demand than what manufacturers are able to produce at the moment, but that's fine, that's not a bad thing. So very strong number, that's the reality. This was a very strong number. Okay, you can see that there, very strong number. Despite that, the market sold off. Okay, so why did it do that? That's why I wanted to go on about this manufacturing number, because it was very strong. Why did the market sell off anyway? So a lot of the news from what I read was because of the Delta variant, right? The COVID. But actually, let's have a look at it, right? So this new variant of COVID, obviously now we're at 90,000 cases per day in the US. In some other countries, obviously, it's tailing off now. This is what people are concerned about at the moment in the US. I'm just seeing what the exact what I'd written down here. Yeah, so 90,000. So yeah, basically I'd written down that we've obviously got a upwards trajectory, but you can see that here anyway. So this is what everyone seems to be talking about at the moment, is that, we've got this increased number of Delta COVID cases. It's a negative factor. That's why the market's selling off. Clearly, as per the week before, the market doesn't give a monkeys about that, because if it did, why did we recover the whole thing, right? I said it last week. The COVID situation, the Delta virus, or whatever it's called, I think it's called the Delta variant, right? It's not just disappeared in one day. Okay, so clearly that wasn't the reason why the market sold off. I've talked about this before as well, so I won't go into a lot of detail about how obviously vaccinations are there. So the Delta variant is not a risk, like in terms of death and etc. etc. I talked about before also the highest risk group, which is over 65s. 80% of them have been vaccinated now. And finally, I think what the market is more focused on at the moment is the consumer. Okay, is the consumer feeling comfortable despite this high cases of COVID to go out? What's the consumer doing? Are they spending? Okay, we're gonna have a look at S&P earnings in a second, and you'll see record revenue growth, 20%. Where does that come from? Thin air? No, of course not. Consumers are spending. That's how corporations are making money. So clearly, yes, there is an issue with COVID cases, but people are still going out. And just finally, I read somewhere that airport traffic, I'd written this down, US airports processed more than 2 million passengers per day for 5 days in a row for the first time since March 2020. Okay, 2 million passengers. So people are going out, okay? They're going out, they're spending money, we're seeing the services number. Everything is pointing towards positivity, okay? So I don't buy any of this rubbish. Having said that, it might be a factor next week, because you'll see the data calendar's light. So there's going to be an opportunity for the media outlets to go crazy with all their conspiracy theories or whatever. Basically, they haven't got a clue what drives the market, so they just say what they want. But the reality is, so why did it sell off? Well, just like the week before, we were near all-time highs. Market was taking some profit. Things got a little bit cheaper, and people came in and felt it was an opportunity to buy ahead of the jobs number. Okay, so you can see here positioning started early this week, kind of Tuesday, Wednesday, going into the jobs report. Services number was very, very strong as well. Let's have a look. I think it was about 64.1, and I believe that could be one of the highest on record, I believe. Having said that, a few of the other services reports, if you go and have a look, I believe that they came in quite weak. So it's a bit of a mixed bag with some of these surveys. So again, I think the market wasn't really too excited by the fact that we had record numbers, and you can see that because the market was quite flat. I think it was in two minds. It's like, all right, we've got record numbers here in services in terms of the survey index, but we've had some mixed services data coming out from some other different types of surveys. So I'll talk about that another time. ISM is one very popular survey. There's Market, who do a survey of services providers, and obviously some of the surveys have been a little bit mixed. So whilst it's very solid, you can see the market didn't really get too excited about it because it was pretty flat. And I think also the market had one eye going into the jobs report, and trade really was not a big number. You can see here on the data calendar, not even there as a high impact event. Imports have obviously been very strong, but that's to be expected because, like I said, there's been bottlenecks in terms of manufacturers and corporates. We saw that, right, with the GDP number last week. Do you remember? It was 6.5 versus 8.5. It was dragged down by inventory issues. So companies, manufacturers are not able to produce as much as they want domestically. So what do? They import it. So, that number just reflected the trade number, even though I haven't got it here, just reflected that, which we already knew was going to happen. So the market kind of shrugged it off. Honestly, didn't care about that. I believe Thursday was just strong. And you'll see, I bought the market, okay? Did very well last week. Sold on this day, bought on this day, bought on this day, bought on this day. Did some buying on this day, okay? So pretty much nailed it last week. Thursday, didn't really think any data had any impact. It was more a positioning play. And then the jobs report came, and by that time, we'd already kind of got to all-time highs. So you can see the market was just kind of flat going into the number. And then I believe we did get quite a big rally after the number, after some posturing for a little while. So that's the whole week, guys. Hopefully that was useful for you. You can see, let's just quickly summarize. Early part of the week was, for me, profit taking. I already explained why all this Delta variant scares and irrelevant to me. I don't think the market cares about it. I think the news are just looking for something to sell newspapers or to get viewership. So they can't just say profit taking. That's boring, even though that's the truth. So obviously they say it's the Delta variant because it sounds exciting, but we know that the reality is that's not what's driving it. We had a recovery, the next day. Then we had the services data, which was, didn't really have a major impact because it's been a little bit mixed is the wrong word, but it just tempered the excitement over this record number. So the market was fairly flat. Thursday, we positioned into the jobs report, and then the jobs report came out and the market was very happy with it. So we didn't necessarily get a massive sell-off. We didn't necessarily get a huge rally in the day because we'd already had it the prior 2 days. Makes sense, straightforward, let's crack on. So next, we talked about the COVID situation already and why, even though the number of cases we can see that are starting to rise is not necessarily anything or cause for concern for the market because it's not reflective in consumer behavior. Consumers are now starting to get very confident about going out. We saw that in the airline numbers. Slip of the mouse there. We talked about the manufacturing number, even though it didn't beat forecast. It's still very, very positive. You can see the trend there. So yeah, week in review. I'm not going to bother going over this. The one thing actually that we didn't cover, the most important thing, how could I forget, was the jobs number, right? So 943,000. Like I said, very strong number, okay? 30 basis points higher than forecast. Dropped almost 0.5% from 5.9% to 5.4%, okay? The unemployment rate. So let's have a look at that. I read a few reports, some saying, it wasn't as strong as it looked on the face of it, and some saying it was great. I'm struggling to find any reason why this wasn't an amazing number. No matter what way you chop it, this was a brilliant number, okay? We talked about this already very briefly. I'm going to come back to that in a second, but the unemployment rate, okay, dropped down to 5.4% there. Okay, we still got a gap to obviously pre-pandemic levels where it was at 3.5%. So there is still a gap, and I'll show you what that gap, how you can represent that in number of jobs. But look, I mean, it is now starting to tick down slowly. So obviously that's good. We'll talk about what that means. Obviously, the Federal Reserve, the FOMC, are going to be under pressure to ease the loose monetary policy, right? So I guess a better word for it is taper it. Stop being so aggressive. I don't think that's going to happen until next year, because we still need to see a few more jobs reports. We're still a little bit away from pre-pandemic levels, and obviously there's kind of other risks, as they said in last 2 weeks ago. They said the statement, there's some economic risks obviously with the jobs report or current employment situation. What do they mean by that? So let's have a look at this in a little bit more detail so you can see it. Basically what it is this is pre-pandemic. Okay, when you look at unemployment percentages, it can all get a bit confusing. 5%, 6%, what does that mean? Basically the economy has shed 22 million jobs from peak to trough, okay, during the pandemic. We have now recovered 16 million of those, okay? So hopefully that gives you some perspective on what this jobs report was. 16 million with the latest 895,000, was it? I've forgotten. Was it 943,000, I beg your pardon. So, okay, so that now brings us to having recovered 16 million of the 22. So you can see there's still a little bit to go. So that is obviously a risk. We'll see how that pans out. I did see something really interesting. Okay, so I think the reality is that we're well on our way to recovery. Okay, I think these high levels in the stock market and so on are all justified. Okay, a lot of people say, you know, valuations are crazy and it's not reflective of how the economy is. I think it's different this time, because if we actually look at this, okay, so this is really interesting. If you look at previous kind of recessions and coming out of recessions, when the unemployment rate obviously does go up, when you have a recession, look at the difference, right, versus previous recessions, where you can see here, so this is the number of job openings minus the number of unemployed. It's actually positive. Okay, what that's telling us is that there's more jobs available than the number of people who we need to catch up over here. Okay, so you know, it says here 16.6 million jobs that we've gained since we lost 22. So what's the difference? About 6. Okay, and I think there's 9 million job openings at the moment. So basically there's 9 million jobs available, and we need to fill 6 million of those to get back to pre-pandemic levels, if that makes sense. Well on the way. Whereas in the past, right, we may have had to catch up in terms of getting people back into work, but we never had the number of jobs available, right? Whereas this time, you've seen it. You know, we hear about it all the time. There's a lot of jobs available. Companies are struggling to find people. Obviously, as people get more confident about wanting to get back out into the workplace. Whereas in the past, you can see we haven't had that, right? Coming out of, obviously, it took a while here. The last recession, do you remember 2008, 2009, housing crash and all of that? Look at that compared to where we are now. Completely different, okay? Took a while for companies to get confident to want to hire people again, whereas now they're desperate. Completely different situation. So I actually think, you know, things are only going to get better. I don't think there's much in terms of headwinds, realistic headwinds, but we'll see. Obviously, we'll see how that goes. So I think basically, to conclude, all this data, what does it mean? What's the market? I mean, why does the market care? FOMC, okay. Everything comes back to the FOMC tapering. Okay, FOMC tapering and sorry, I just had something there. FOMC tapering, and when will rates rise. Okay, because obviously if rates rise too aggressively, that will affect the stock market. Obviously valuations get affected because of discount rates going up, and I don't want to get into that, but basically company valuations will get affected by interest rates rising, and obviously it does affect consumers as well, and confidence, and obviously borrowing money becomes more expensive, and we're going to see that in a second. But yeah, basically I think things are going to continue to get strong. So likely the FOMC, probably they'll be discussing it. I reckon August, September, as in this month, next month, they're going to be talking about tapering. So expect a little bit of volatility, I think, this month. And we're going to talk about that. I'm expecting a bit of up and down action, a little bit more, because volatility has been very low. I'm expecting more volatility going into this month. You're going to see why that is, because when we talk about next week's calendar, very light on the data calendar, so the market's going to be thinking about all sorts of things. I think the market will think about the Delta variant. Seasonality is going to be very important. It's going to give, I've put here media fuel, it's going to give the media, because we have a light data calendar and we have this weak seasonal period. So what do I mean by that? Well, over the last 100 years, on average, okay, in September, you can see here, the worst performing month for the equity market. It did okay in August, but if we exclude the last 100 years and just say the last 50 years and the last 20 years, in the last 50 years and the last 20 years, can you see September and August, okay, the last 20 years, weakest months generally. June was obviously quite weak there, and then the last 50 years, June and September. But look at the pattern here. September, very weak month, okay. August as well has not been a great month for the market seasonally, okay. Are there mitigating factors to that? Yeah, last couple years these have been positive months, but it's gonna give the media a lot to kind of, you know, all these scaremongering and, you know, is this the top of the market? You know, the media is going to be looking for reasons why, as they have been, you know, why we might sell off, and obviously you'll hear this come up a lot. Whether that affects investors, I don't know, so I'm going to be thinking about that a little bit. We'll see, okay. One thing I forgot to talk about earlier was just this consumer graph. We're going to go through it very quickly. Talked about the Delta variant, but obviously this shows that consumer confidence is very strong. The consumer is very strong. This is shown here in the delinquency rates. You can see them all fairly low, right? Very, very low delinquency rates. So obviously the consumer health of the consumer is fairly strong. Another reason why I think the Delta variant sort of news is overdone. Having said that, I do want to counter this, because let's just wrap up here. So the last kind of thing I want to talk about in this video is the data calendar going forward for the next week. Okay, so why is it important what I just talked about, the consumer and the Delta variant there? Because we have a very light data calendar, okay? Yeah, we got some CPI data, but I don't think the market's really going to look at that too much. Obviously the Fed's preferred measure is core PCE, so yeah, they'll look at that, but I don't think it's going to be that big a factor, because the Fed's already said they don't care if inflation stays elevated, they're expecting it to come down over time. So whatever, even if the number is high or low, I don't really think the market is going to pay much attention to it. We also, by the way, I think there's only 12 companies reporting earnings next week. So here we go. I think the focus next week, that's why we're all here, Institutional Sundays, what's going to happen next week. Focus will be on seasonals, as I said. People thinking about, well, August is fairly weak. September tends to be a negative month, generally always, apart from the last couple of years. On average, August and September are very weak months. So I think that might be weighing on people's minds. Okay, so we might see not much impetus for us to keep making highs. So I think we're going to go into quite a level of uncertainty, maybe a little bit of volatility coming into the next week or two, especially this week. COVID, the Delta variant, I told you my opinion on it, but I just think because there's nothing else, and the media are going to be obviously coming out with a lot of this stuff, I think investors, because they have nothing else to distract them, last week they had the jobs report, week before FOMC, this week nothing really, it might start to obviously affect some investors, so we might see some uncertainty come in. And then also GDP growth forecast will be quite interesting as well. Just, people, they'll have some time on their hands because there ain't going to be much data, so they'll start to look at what are the investment banks kind of forecasting next year for growth, especially now with this latest jobs numbers come up. Is that going to affect the forecast? What's the forecast for kind of Fed tapering? So it'll be very interesting to see that kind of stuff. So expect, I think, a little bit of volatility, not much impetus for new highs. So that's kind of how I'll be approaching the week. As you can tell, even the way I'm talking, a little bit all over the place. Just going to take it day by day, see how the market starts off. And in fact, we can have a look in a second how the market started off because I think it's just opened. And just finally, let's wrap up last week's performance, payroll performance. You can see there, basically, just under 8,000, just over 7,000, usual, right? You guys know my MAE about 1,000 average. Daily gain was slightly higher actually, about 1,400, but average winning trade 1,100. Kept up that high win percentage, but obviously you can't do that all the time, so it is what it is. I'm going to show you quickly how the market's opened. I'm also going to show you my live account for this so you can see it, which no one else does, let's be honest, and then we're just going to wrap it up. So quickly, let's get on the charts. Okay, here we are. You can see the market's just opened as usual. No one showing this stuff. Okay, you can see all my fills from last week, buying, as I told you I did. Okay, there you go, you can see the buying there as well. Did some more buying on Tuesday, Friday. So, and I did sell actually, as I said, on this particular day, I did some selling. There you can see a little bit of selling, and then the rest of the week was just buying. So, and positioning for the payrolls number. And in fact, trade activity log, there you go, guys. What else can you say? My last week, there you go, long trades. Can you see 6,000, just over 6,000 on long trades, just over 1,000, so just about 1,000 on short trades. Okay, so that's mine. There you can see all symbols, non-sim. You see my account there, 123972, which obviously the same one I always show. And in fact, here you go, 7,200. You can see it here on my performance log, which I showed you guys, yeah, 7,200. All right, guys. So, if you know anyone who shows that stuff, listen to them, okay? But I know there isn't no one because it's a pipe dream. All right, people love showing screenshots and bull. I don't want to swear on the video, but yeah, basically it's all nonsense. So be very careful what you're listening to, because yeah. Hopefully that was useful. Like and subscribe. What else? Before I forget, the last few things we're basically done now. Don't forget to like and subscribe the video. Follow me on Instagram because I show everything basically and have a bit of fun as well at NVForex. Leave me some comments, right? Let me know what you think, whether it's the mic. Do you enjoy these videos? I'm going to try and do them every Sunday by 7 p.m. Okay, this one, I'm going to be honest with you, it's now 2 o'clock in the morning on a Sunday night, so Monday morning, but because I had a lot on, but I'm going to try and fit this into my schedule so I can actually get it out on a Sunday by 7 p.m. Let me know what you think. 7 p.m. UK time. Any comments welcome. Let me know. Hopefully that's useful. Look forward to catching you in the next Institutional Sundays, guys. Have a great week.